Blockchain Wayne bought his first Bitcoin from an ATM in New Orleans. From there, he stacked sats faithfully each week. His life has changed, and he wants to teach you the important things you need to know to stack your first sats too. It's Blockchain Wayne. Welcome to Sat Chats, the Bitcoin podcast where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Sat Chats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So if you are brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart Bitcoin Maxi, who wears prescription sunglasses to protect you and your loved ones from my Bitcoin laser eyes.
And I'm your co-host, Chris, founder and CEO of Ithaca Hummus, proud multi-coiner and Bitcoin smash buyer. And if you are anything like me, or even if you're not, hit that, smash that subscribe button, like, comment. If you're on Spotify, give us the bells, give us the whistles, the thumbs up.
Yeah, and what are our two big fat unlocks when we reach?
Oh, boy. Okay, yeah. So when we get to 1,000, or as Stuart likes to say, 999 plus one subscribers on YouTube, we will be giving away 1 million sats to one lucky, randomly selected subscriber. And we'll be starting a live show Fridays, 10 a.m. Eastern Standard Time, and it's going to be a lot of fun.
So do not be subscriber number 1001. Smash it now. Get your million sats. Come on.
Let's go.
Today in the studio, we have got Blockchain Wayne coming to us outside of New Orleans.
Love it.
And we are absolutely pumped to get his Bitcoin story. Before we do, Wayne, help our satillionaires get to know you a little bit.
All right. Well, thanks for having me on, guys. Yeah. So I am from right outside of New Orleans, Louisiana, down south. Got into this space. I would say officially jumped in early 2016. 2015 was my orange pill moment. And it's just been a roller coaster since. I now work in this industry, help to build tools that make wallets easier for people to use. So we work with a lot of wallet companies out there, but it's been a journey. Would you like?
Give me like 9 seconds on how you make wallets easier to use, because the theme of adoption is a heavy one among all of our beginners.
Yeah, absolutely. I mean, that has been a focus of mine. That's how I kind of aligned with what I'm doing now. Is we built protocols that simplify the experience of sending and receiving assets. So being able to, create a protocol that allows a user to link all their different chain addresses to one universal handle.
So are you saying, like, because today, when I open up my wallet, I'm like, all right, let me make sure, let's see, like a BC1 Q9NJ, and I'm like, I really hope this is correct. Like, are you saying that you're going to kind of transform that almost into like an email address, like it's on the Lightning Network, or like an X handle where it's like, look, if you just send it to this name, it'll get to me?
Yeah, it is. So it's a universal handle, and it's in the format of user at domain. So we work with a lot of different wallets. So if you go into Edge Wallet today, your Bitcoin address could be your username at Edge. If you go into Trust Wallet today, it could be your username at Trust, or you can customize that ending if you like. What we did 5 years ago is we launched basically it was a single purpose blockchain. It's only focused on being like a data layer. So we're not trying to compete with currencies or anything else. But it allows you to register those handles and then map them to that one universal address. Just keeps it simple, easy to use. If you go into most of our wallet partners right now, we have it set up to where we're actually, we've been live for 5 years, but we're still paying for that user to get their first handle for free. The handles after that only cost like $1, so it's not like a lot, but we want to focus on user adoption. So 5 years ago, we launched. About 100,000 handles were registered in that first year. Now we're in a lot of different wallets. We're still trying to expand. I mean, every time you turn around, right, there's new wallets out there, new features. And now we just hit about 2.1 million handles that have been registered. for you
Wow.
to simplify it. So if you type the address wrong, it won't let you send it. If you type it right, say I'm trying to send you Bitcoin, but you don't have a Bitcoin address linked to that handle yet, it won't let you send it. So it stops the user from making that critical mistake that we all know. I know the first time I went to, first time I'm learning about self-custody, and I go to, in 2016, I go to withdraw my Bitcoin from Coinbase to my wallet. I had to call my friend. I was like, hey, man, what is this? What do I have to do? And he put the fear of God in me, which is basically get every letter and number correct when you copy and paste. If you make one mistake, you're going to lose all your money. And that was like, man, this is too hard. This is complicated, right? And so we figure we got to simplify it. And looking at past technology cycles, it's easy to see technology gets further adopted when you make it easy, when you make it simple. Hide the complexities. I say hide the wires from the user. Just show them what they need to do.
Yeah. Okay. So that's really interesting. And I'm also interested to hear your Bitcoin story, right? Because it sounds like you've been in for more than 8 years, which is effectively 2 quote unquote cycles, depending on who you're talking to.
Yeah.
Where were you? What were you doing? What was it like before you found Bitcoin? What was going on in your life? What were those problems? How did you find it? How did you feel when you found it?
Yeah. So for me, it actually started with really a bad stock investment I had that I'd put quite a bit of money in, and it went down. And I've always been into tech. I've been a tech guy, but I was ignoring Bitcoin. I was kind of, like a lot of us when it first came out, first heard about it early on, but just dismissed it. And then in 2015, realized talking to a friend, and he actually made the comment. He was like, Wayne, you need to stop ignoring Bitcoin. And I was like, I just don't understand. I don't get it. How can something that's not tangible have value, right? And so that was my struggle. But I told him, I said, look, I had this bad stock investment, and it went from about 25K to about 3K in value. And I was like, if I lose the last 3K, who cares? But I need to put this in something that has potential for growth. And, he was like, Bitcoin is where you need to start getting in and just start accumulating. And so took his advice off of that and turned that 3K into 3 Bitcoin, right? And that was my first story. Funny enough, I was trying to get verified on Coinbase, and I could not get they were having trouble with their KYC verification. And so not knowing any better, what I did is I just took 3K out in cash. I live about 45-minute drive to New Orleans in the suburbs. And so I drove into the city. There was one Bitcoin ATM in the whole metro area, and I found that Bitcoin ATM, and I pumped my 20s into that machine until I got all the Bitcoin that I wanted. And that was really my first experience with it. But then I'm the type of person, I can't just hold something and not know more about it. And it dawned on me, I was like, my struggle is not around what is Bitcoin and how does it work. My initial struggle was our financial systems, right? How do our financial systems operate? Because everybody I talked to since that I knew had kind of got involved, they were talking about issues with our current financial system. So I went down that rabbit hole, right? Fiat currencies, fractional reserve banking, the Federal Reserve, that whole rabbit hole. And I realized, I was like, I don't understand this Bitcoin thing quite yet, but we've got problems. We've got issues. And started to see everything in like the banking and finance sector is just to be a house of cards that, could be propped up for a long time, but could collapse at any point. And that's when I had the 2 aha moments. One, I need to start stacking Bitcoin. So January 2017 was when I set up my first recurring buy for Bitcoin, to where I was buying every Friday, no matter what. And that's been running ever since.
And what level is that at, if you don't mind me asking? Each Friday, automatically, which exchange and how much?
So it's changed exchanges. Initially, it was Coinbase, and then it was Swan, and now it's Strike. Okay. But no matter what, it's at least $50 every Friday. Now, sometimes when the price is going different places, I'll smash an instant buy here or there. But $50 every Friday, which is only $200 a month. And if you and I teach people to use the DCA calculator. I don't know if you guys have seen that or talked about that before, but it's a website called dcabtc.com. And you can basically look at that time period. You pick a time period, pick a frequency, and how much you put in, and it'll show you what that is. And that's been relative outside of that first 3 Bitcoin. That's been my best investment, because everything else I've traded, I've participated in different ICOs and new token launches, and a lot of times just kind of regret not just leaving it leaving it in Bitcoin until years later when I finally got better at trading. And now my trading strategy is to use when altcoins are moving, is to use that to stack more sats in different market cycles. So, but that DCA, people, not everybody's cut out to trade. It's an emotional game. So I teach most people just set it and forget it. Like set up that recurring buy, pay attention to the market. If you ever get a chance to smash that buy, like the price drops, I was actually I was in Amsterdam last week and a little bit prior, and watching the market as I'm traveling and doing a little bit of the touristy stuff, and market alerts hit and jump in and smash some more. But that's really where I think most people need to be. But I also realized at that point that the complexity of this industry can be hard for people. The sending, the receiving, the how to properly manage and store your private keys to your wallets, and all those things that go along with it. And so that's why in 2018, that's kind of how the blockchain Wayne thing started. I started podcasting just to kind of get better at speaking about it. And from there, the name Blockchain Wayne kind of stuck. I just started it because it rhymed. I was like, hey, I need a podcast persona. And it stuck. And so that's led to, over the years of, I've helped many different companies, because I realized so many different companies that are building tools in this industry, they're not even taking the time to educate users about the basics. And so it's this echo chamber where everybody's trying to steal users from each other, right? Instead of onboarding more users. And so that was the focus I did, started building educational content, which led to holding a few conferences. Realized I was not really into the conference scene. We did really well. But from there, a lot of the connections I've made over the years have led to me leaving a corporate job I had that was not even related to Bitcoin or anything in this industry, to now doing this thing full time, where I pretty much focus on growing our ecosystem of partners that are simplifying, user experience.
Okay, let's march through that, because we heard several mind-blowing items all in a row. Real nonchalantly delivered, no biggie, real quick, 3 Bitcoin, $3,000, all good. Like just real smooth over the top, and like wherever you're like, oh my goodness. So it sounds like you're well. Actually, let me back up for a second. Was the bad stock market trade that is what led to the orange pill year for you, right? You weren't studying it previous. You basically you made a bad trade. You had $25,000 in the game. Something happened to the company or whatever, stock market, etc. It dips to $3,000. You're like, dude, I just lost $22,000. This $3,000 is as good as lost. What should I do with it? And your buddy, who literally has to be the man, was like, hey, go get some Bitcoin. You drive to an ATM in New Orleans because Coinbase can't KYC you, which for all our satillionaires out there, they need to know who you are these days on these exchanges.
Yeah.
And you put, I mean, you put 150 $20 bills into an ATM machine in order to
20s.
Funny, halfway through, the guy, I had to call the number on the machine because I'm like, hey, it says that you need to top up your machine. Like he didn't have whatever wallet it was pulling from. He didn't have any more Bitcoin in it. So I had to call the guy halfway through. And this was, this was before Bitcoin ATMs were everywhere. And so this was very much a sketchy gas station that same buddy that had kind of told me to get into Bitcoin. He knew about the ATM, and he I basically said, hey, watch my back while I pump all these 20s into the machine. So it was a process.
Wow. But now let's imagine you hung on to those Bitcoin. I won't ask you to tell us whether you did or not for operational security purposes, but let's imagine you still have those 3 coins. We're at 80 some odd thousand right now.
81,780. Yeah.
I mean, so the guy's at 244K. So you went from losing 22,000 on a $25,000 deal to being at 240K plus off of 3,000. Like, we do want everyone on the show to move beyond the number go up technology to all the other things that Bitcoin can do for you. But my goodness, if it isn't a great way to get people interested in stacking their first sats. Do you feel like your educational material and all the beginners you work with often approach Bitcoin from, dude, you made how much with how much?
Yeah, and the initial reaction for people today, and even along the way, is even when it was 10K, even it was 20K, right? Even when it was going up, was, oh well, that's great for you, but I missed it. And it's funny, the ones that didn't listen to me at 10K listened to me when it hit 40K, right? So it's everybody gets in at a different point, but that's why when I'm teaching someone about this, the first thing I want them to learn is the history of money and how our current financial systems operate, because you can't understand how Bitcoin could potentially have no top until you understand that fiat currency, has no bottom, right? Even when it falls 90% in value, it can still fall another 90% in value from there, right? So that's a mentality people have to understand, because then it's hard to grasp when you think about that, and then it becomes that this one time thing happened, I missed it. No, getting in at 80K, and Bitcoin inevitably hits that $1 million mark. That's just like getting in at 8K when it hit 100K, right? So it's all about percentages, and that's what I want more people to realize is this is not a one and done. Like as long as you have those fiat currencies out there that are falling in value, which governments are just printing more, and the scarcity of Bitcoin is something that people need to pay attention to.
So we'll dive into that as well, because I want your help explaining that to our audience of satillionaires who need to get that contextual framework. But before we do, let's roll back to the beginning of 2017. Now you've got 3 Bitcoin to your name, and you decide to start dollar cost averaging at $50 a week, every week since 2017. Now, on this show, Wayne, I am satchats' Safe Dean Maxi. Chris is this show's Chad Michael Saylor Maxi. So Chris smash buys. Chris wants to leverage his face into infinity. Chris wants, he's not even a Bitcoin maxi. He's a double or a triple maxi. He's absolutely yeeting himself into Bitcoin like you wouldn't believe. Me, I'm over here, I'm chugging along. And I also, funnily enough, buy $50 of Bitcoin each week. But I haven't been doing it since 2017. Man alive. I've been doing it since last year. So, I'm where you were 8 some odd years ago, and I'm getting so pumped for myself for like 2033. But what we recommend on the show, since people come from all different backgrounds and means, hey, don't worry about $50 a week. Just let me get $50 a month, man. Like, everybody can find $50 a month somehow, some way. And I keep referencing a study that showed $50 a month over 5 years in a certain 5-year Bitcoin period led to not $3,000, which is how much they bought, but $250K. And it's just an illustrative example to say, look, guys, put in a little bit each month, and over time, you're going to love, what happens. And, you've had that happen to you. So yes, you smash bought your first 3 Bitcoin, but what has that weekly DCA for the past 8 years done for you?
Yeah, I mean, it's definitely a belief builder, and it helps you. Like for me, with the volatility in the market, when you are looking at price, I'm not as emotionally connected to it as if I'd have just dropped 100 grand in last week, and then at 95K, and then now the market's 81. For me, the market goes up, market goes down. It doesn't matter. I'm buying no matter what. My long-term strategy is to hold. I'm not selling that tomorrow. I'm not selling it next month, next year. So it doesn't matter about the price. I find the biggest thing for me is, and for other people, is it takes a lot of that emotion out of the market. Instead of when people are, if you're going to smash buy, you got to understand, hey, if it goes down, you're just going to maybe smash buy some more. Not, I'm going to dump everything I have in at this point and then panic every time the market drops a few points. So that's the biggest thing for me is, and then over the years, it's just continued to build that belief that, if you do that, and I have 100% confidence telling this to everybody because it hasn't changed yet, is you do that for 4 years or more, you never regret it. All right. As long, at the 4 year point, even less than 4 years, you can still be sitting pretty good. But at that 4 year point on, you're not really going to regret it. And most people have that, they have that mentality. If you think of people that have worked for companies where they just blindly put into a 401k every paycheck, month over month, year over year, and maybe they watch it a little bit, but over time it compounds, and that's that's where you end up with substantial savings. That's how it that's how it worked for many years. How long that will continue, I don't know, but this is kind of, when I talk about DCA, to get people to understand it, I say it's kind of like the 401k approach. You're funding your own 401k.
So I like that advice. If you're going to smash buy, be ready to smash buy more when it dips, because that's what happens to Chris. He'll smash buy it and he'll dip, and he doesn't get angry. He's like, oh my gosh, I need to smash buy more. So smash buyers are going to smash buy. Smash buyers are a unique breed, personally. But your dollar cost average strategy over the past 8 some odd years, you categorically end up in a good position because your cost basis is simply lower than the current, price. We're trying to move to the term exchange rate on this show so that we can help beginners understand that we're talking about money. Bitcoin is money. But your cost basis is just below the current exchange rate of Bitcoin, period.
Yeah. I like to get people too, if you look it up on Google and you do the reverse exchange rate, to where you show not just how many dollars per Bitcoin, but how much Bitcoin per dollar. You see that chart there. And so I tell people look at it as you're selling dollars. So it seems for the last 8 years, I've been selling dollars at the top, right?
Oh, wow, dude. Oh, that's crazy. Okay, so when you flip it on its head, that chart goes downward, and you can say, well, look, see, I've been selling dollars at their absolute peak value this whole time.
Yeah, absolutely.
Yeah.
Always true.
Okay, so, and then if I can remember, DCABTC.com is the DCA calculator?
Yes, it is.
Okay, that's cool. That's a new resource that we have not heard about.
Yeah, it's a free tool. You can adjust the parameters. You can pick a certain time period. You can just pick a certain number of years in the past, and then pick your dollar amount, how frequently you buy, and it'll show you how much is going into it and what the current rate is.
Out of curiosity, because these days we're getting maybe 50,000 to 60,000 sats over here. At least I am, from my weekly $50 buy. But in 2017, when you were buying $50, can you remember how many sats you were getting per transaction?
Oh man, I wasn't even looking at it then, but you figure Bitcoin around that time was fluctuating between 1,000 and 1,300. So,
dude, so that's like 0.05 Bitcoin. A weekly 0.05 Bitcoin buy? Oh my gosh. Then 2 weeks is 0.1. In 20 weeks, you got a coin.
Yeah.
Oh my gosh. All right. So we'll try to mop the drool up here off of our chin and move on to something more beneficial here. Because as my son says, I'm simping. I'm simping on blockchain Wayne.
Simping.
It's good no matter what. I mean, that was just my first few months of 2017. If you remember, I think it was around the summer we started to see 1,800, $2,000, $3,000, $4,000. It was a massive buyout. But either way, I mean, that's and there's going to be people that's going to be simping on you. Give it a few more years, and they're going to be looking at what you've been putting in now, and be jealous about the fact that they didn't get in early. And,
So, and it sounded like once you got enough, once you kind of changed your lifestyle in terms of grabbing some Bitcoin, accumulating some Bitcoin, you were eventually able to just say, you know what, let's focus entirely on Bitcoin and focus on making adoption easier through FIO, right? You left your normal job and just went to work for Bitcoin.
Yeah, absolutely. Yeah. I get paid, 100%. I won't say Bitcoin, but in stablecoin, USDC, and it's been a different role, being to drive adoption. And I think we need to move a lot of people um, into Bitcoin. I think Bitcoin, I tell you guys both, I'm not a Bitcoin maxi, but I'm a Bitcoin mostly, right? Only because, but anything outside of Bitcoin, it's almost similar to stock market, right? You got to invest in people, you got to invest in projects, and it's very risky. And a lot of times, you've just been better off holding Bitcoin. And so, a lot of people coming into this industry or coming into the space to invest need to learn that as well. Because if you don't start with Bitcoin, you're going to fall for the fastest blockchain out there. Who cares? The fastest network is centralized, right? So it doesn't. You fall for those buzzwords and those key terms. And I did some of that. I wish I could say I kept all of that first three. I lost a little bit in a scam. And then throughout 2017, there was a big hype at the time. It was Ethereum-based ICOs, and every project had a white paper, and they were doing an ICO, and you can get in early. And most of that didn't work out. You realize afterwards that you'd been better off. And I think most people that go through investing in all these different altcoins, if they stick through a full cycle, most of them they'll come out of that in either a Bitcoin maximalist or very close to being one. Like I said, kind of like me, to where it's like most.
Wow. Okay. So if you spend enough time in crypto, you'll realize Bitcoin. So that's a really interesting story, Wayne, about finding Bitcoin through a bad trade, adopting some really sound long-term strategies for stacking sats, and ultimately changing your whole life and what you do for a living and everything. You also mentioned focusing on beginners and this concept of, getting out of the business of fighting Bitcoin echo chamber content creators for their, share of the people who are already on fire for Bitcoin. You went out to look for new people to onboard and get a bigger audience, and, a very important one. You mentioned educating them, focusing on helping them understand, and that one of the first things you do is start with the history of money and how the traditional systems work. So maybe for our satillionaires, we could take a moment to just, crisscross applesauce here at your feet and just listen to what that means for you so that we can learn as well.
You mean as far as the understanding the financial systems?
Yeah, like if you were to spend a couple of minutes trying to get people introduced to that who might be listening to the show, like how would you take them through the history of money and how the system works so that they can be prepared to compare all that to Bitcoin?
Yeah, and so first, it's understanding the different forms of money over the years, because most of our life, almost all of our life, it's if you're in the U.S., right? Give it an example. It's been the dollar, right? We haven't had all these different currencies to use. Now, if you travel, you may get exposed to other currencies, but it's understanding different things over the years that have had value, whether it's gold coins, whether it's seashells, whether it's salt, and all these different forms of money that we just look at today as we don't view a lot of them as money anymore. But they had over time, and then kind of what some of the fallacies were of them. Right? If seashells were a form of money, then if you live very much inland, it could be scarce, right? It has a level of scarcity. So understanding those properties of money, to where then if you live near a beach, then that wouldn't really be a good monetary source. And that just opens people up to the idea that money is more than just these paper bills that we're used to, because it's so much more than that. And then you go down the history of what fiat currencies is, where governments have currencies that are no longer backed by any physical commodity or asset like gold, right? The dollar hasn't been backed by gold for many years. We know when the declaration was made, when Nixon said that it was no longer redeemable, but we know way before that it wasn't really a fair ratio or a just ratio anymore, because the government had been constantly printing money. And then we see the cost of things go up over time, and if you don't understand what causes inflation, that's where you hear people say, just corporations get greedy. And there could be some of that, but most of it is just the fact that costs go up, we're diluting the money supply, and So I studied kind of the creation of the Federal Reserve, The Creature from Jekyll Island. I recommend everybody read that one. That's a great book to, and there's even a video on YouTube. You can watch it if you want to watch it and listen to someone read it instead of actually going through and reading the book. It'll teach you about that creation, what it was intended to do. And so when we see this rapidly growing national debt, prices consistently going up, when we look at the cost of goods, and people will say the system's broken. Well, when you understand The Creature from Jekyll Island and how the Federal Reserve was created, it's operating as intended. It wasn't, it's not broken. It is bad for us, but it's operating as they intended. And so all those things, and you compound that. When I do a simple math with somebody in terms of fractional reserve banking and how much extra fake money fractional reserve banking puts into circulation, just numbers in the computer that don't really exist, right? And you just do that scenario where you have someone deposit, say, $1,000 into a bank, and this is assuming a 10% reserve, right? During COVID, I know they dropped it to zero. They haven't really been transparent about what it is now. Well, let's just say 10%. So 90% of that gets loaned out to someone else, right? And then that money gets loaned out maybe to someone else. They put that in a different bank. They will hold 10% of that and loan out 90% again. And just 3 to 5 levels deep, you're creating multiple thousands of dollars from that one initial $1,000 deposit. And if you and I were to create a business that did that today, we'd probably be arrested in no time, right? That's a Ponzi, that's fake, and that's kind of what the government is doing. So then you understand the fixed scarcity of Bitcoin. It is a fixed supply asset, and the way it's designed, sats become more valuable as demand increases, because you can't just go out and create more and generate more, but the divisibility of Bitcoin allows it to accommodate that increased demand. And all you have to look at the last 15 years, and I tell people, has the demand and the use of Bitcoin going down or up? And is it continuing to go up or down? Are you hearing more about it? Hearing more about more people using it, more more companies accepting it, more. Now you have all these governments that are looking to add it as reserves, which is kind of debatable over long term whether that's good or bad for Bitcoin. But in terms of scarcity, it's helping the scarcity, and so it's a no brainer. And that is kind of where I want people to understand that this is not just a speculative investment that we're just putting money in this thing and we're hoping it's going to go up and enough people use it. Like it's happening in front of our eyes, and you just have to look at that. Even today, the demand for Bitcoin has never been higher. So even when the price is volatile, right? You look at price and say it was, just not too long ago it was over 105K and now it's back down to 80K. Is it going to go lower? Who cares? The demands continue to go up. When you understand how to look at exchanges order books, and you can see that what they're holding of Bitcoin, like that supply is getting less and less and less. That's the real indicator, not what the current price is. Current price is what people are willing to, sell it for, or buy it for. But that can be impacted by emotions. So you have to take the emotions out and look at just the facts of what's happening. History of money helps you understand how Bitcoin can have value, even though it's not. I can't touch it. I can't feel it. And then understanding the financial systems, Federal Reserve, that makes you realize that we need something to save us, to move from the system.
So that's a really nice overview of the different stages that I went through to get to where I was like, hold on, Bitcoin, hang on, Bitcoin. So, the first thing that you talked about for our satillionaires out there was this concept of different forms of money over time. And it's very interesting to hear, for example, that a group of Native Americans or American Indians using seashells near the heart of the country, maybe present day Ohio, Indiana, a seashell might be a pretty decent form of money because they're hard to come by. You can drop a handful into someone else's hand. You could have one seashell, 10 seashells, 100 seashells. You could string them around on a string, wear them on a necklace, whatever you want to do to kind of carry them with you. And, it's not likely that a ton of seashells are going to appear out of nowhere and devalue your share of the seashell network. But if you live by the dadgum ocean, they're everywhere. The seashells are worthless. And you could probably make a pretty penny by just scooping up a ton of seashells and hiking your little booty overland, and staying alive, hopefully, in those days, to where you could go get whatever you wanted from the inland Native Americans. You could be like, give me all your stuff. Just give it all to me because I'm rich compared to you. So, the money is only good so long as it's scarce, but with a seashell, with a glass bead, with a yap stone, you can create a scenario where very quickly you can flood the market just by taking it from where it's abundant to where it is not. Yeah. Maybe gold, maybe silver is a little bit tougher because it's kind of hard to find, and it can be expensive to uncover to where it doesn't really justify the work. But when you compare that to, and by the way, US dollars, you don't even have to go to the ocean. You don't even have to go to the printer anymore. They used to, everybody in the Bitcoin community says printer goes burr, but somebody on our show was like, dude, it's more like button goes click. It's more like button goes click these days, but we'll hold that for a second. Compared to the history of money, Bitcoin represents a form of money that is verifiably scarce, whether you are inland or on the coast.
Yeah. And not only that, I mean, all those different forms of money, eventually as technology evolved, they were all diluted and collapsed. The seashell market, I forgot there was an island in the Pacific, right, that was using these giant stones that just stayed in the court, and they were very
stones.
Yeah, very hard to produce. But then as technology and shipping became more efficient, their market just got flooded with more, that were it basically diluted what they had. And so, you're right, Bitcoin is verifiable by anybody, anywhere, no matter what. You can, tell that there's only so many sats.
Mm-hmm. So then after that, you talked about the Federal Reserve and fiat currency and the Creature from Jekyll Island, which I still haven't read yet. And I do need to read that. My understanding, because I went down the rabbit hole as well. I think I watched a documentary that talked, it was like all the history of the Federal Reserve. I can't remember. But ultimately, my impression was that the Federal Reserve was trying to do something. They're trying to centralize all of that business, and it's just not possible. And so, of course, we have all these huge problems. But you said something very interesting, which is the Federal Reserve is working as intended. What do you mean by that?
It was just designed to continue to centralize wealth and power and extract that wealth. You think about how it operates. Nobody's life is improved by holding dollars over the long term, right? It's always been, my parents worked for many years to save money into dollars and had to figure what they thought when they got to retirement. Today, that figure is not anywhere near enough. And so through, just blatantly printing money, using that money, the wealthy use the money buy assets, and that's, assets appreciate in value because they're continuing to devalue that dollar. So we've got to look at it the same way. I'm not going to hold my money in dollars. I'm going to hold it in Bitcoin because they can't dilute my Bitcoin, sats. They can't dilute the value of that by printing more. They just can't create more. And so that's important. There's actually 3 books that I recommend. People really want to go hard into it. Obviously, I think you probably mentioned one, right? So the Bitcoin Standard is important for people to understand. The Creature from Jekyll Island. And then the last one is a bit of a long, I listened to the audiobook, but Lynn Alden's Broken Money. It's long, but I tell you what, it really gives you a lot of insight into a lot of the problems, because you can't really understand the significance of Bitcoin until you understand the problems we have. That's with any technology. Most technology doesn't really get adopted until you understand what problem does it solve? Why is this important for me, right? Obviously, the automobile makes sense because it can get around a lot quicker. But I think people's biggest problem in this country, and actually, I made a couple of shirts that I wear all the time that actually say "Fix the money, fix the world," because finances is one of the biggest problems. Money issues is that's one of the biggest problems that faces anyone from emerging countries to even people in the lower middle class in the U.S. today that are just struggling just to make it.
I love that. You can't understand the solution until you understand the problem.
Right.
That's my contribution.
Give me like 90 seconds on this concept of Bitcoin has no top because fiat has no bottom, right? A number of times we've tried to do the math on this show about how the 2 to 3% inflation, which is not even the real number, but just taking it at face value, then is it every 50 years, every 40 years with compound interest, every 35 years with compound interest, that our purchasing power effectively goes to zero, and we're basically bankrupted without even knowing it? How do you explain that to people?
Yeah, the simplest way is, just take a number. You're right. And I don't know, I don't have a calculator in front of me, right? Every 30 to 45 years, right? It eventually loses all the purchasing power. Or say 99%, but when something falls 99% and it's at a new level, then it can fall another 99% from there, which is why our parents were going to the movie theater and paying a nickel to get in, right? And now we're paying like $20 a person just to get in. Something can fall drastically and still have more room to fall. And so as more dollars come into creation, just look at the dollar creation over the years and you'll see kind of just that supply really get ramped up. And then, of course, 2001, you see a spike, which looks like nothing now today. But if you just zoom back in that area, it was very big. And then 2008, you saw another massive spike, which, again, compared to where we are now, it doesn't look that big. And then you have COVID, where money was just going crazy. And, it's funny, is September 2019, I was posting quite a bit because I was really tuned into what was happening with our dollars and with the banking system. And I don't know if you guys have ever talked about or looked into like the overnight repo loans where banks are having to borrow money just so they have enough liquidity to survive. And they were borrowing billions and billions in September every night. And, I was posting that like you were going to have a financial collapse unless there was a giant injection of capital. And what happened in 2020? Printer went really bruh, right? Now, granted, they just clicked it, but, massive amount of printing. And all the economists, quote unquote, economists at the time that were on TV were saying that it wasn't going to impact inflation. We all know what's happened since then, right? What have prices gone to? And so you can't just dilute money supply. We're in a global economy. If we lived in a bubble where we weren't importing or exporting everything, then it might last longer where we could print money without any repercussions. But when you have people all over the world that are holding dollars and bonds, and then we just go and print a bunch more, well, that's diluting that supply. The desire for it becomes less and less, and that's why things go to cost more. So that's how things can continue to fall. Is we had another crisis or decided to print a ton more money. Let's face it, we're already at 36 trillion in debt as a country. It's not getting, that number's never going down, right? It's constantly going up, and so that's going to also lead to more and more shakiness in the value of the dollar. And that's where you have to put your money into hard assets. And the hardest asset out there is Bitcoin, right? It's harder than real estate. It's harder than gold. It's because it's programmed to be that way. You can't just say, okay, we're going to create another 21 million Bitcoin. People have tried it with other coins, right? But that's it. And, so Bitcoin is the long-term solution because as that money continues to get diluted, Bitcoin value to that diluted money goes up. So it's out of that concept of people think, oh, it's just appreciating in value because more and more people want it. No, it's appreciating in value because what we're judging it against or rating it against is continually going down.
Blockchain Wayne is lighting me on fire. I absolutely love talking with other people who get it because it was such a mental somersault for me that when I finally got it and started trying to take it back to other people, they're like, what are you talking about? They're like, my home is going up. I'm like, it's not. Your home's not. It's not. And they're like, it is. I love my house. It's an asset. I'm like, no. So, there's so much that we could talk about with you today, Wayne. And we do ask each of our guests if they would be willing to come back on the show in 9 months to give us an update on their Bitcoin, baby. Will you come back on in 9 so we can keep rolling?
Absolutely.
Okay. I'm looking forward to that. So let's recap today's conversation. Blockchain Wayne, nasty hobbit of a trade, and lost 22K on the dial, took the remaining 3, smashed some Bitcoin with it, started dollar cost averaging early 2017 to the tune of $50 a week. And what happened? His life changed. His life got better, period. Bitcoin is great, period. Dollar cost averaging works, period. And you got to a point where you're like, hey, I'm going to trade in my day job. I'm going to go to work for Bitcoin. I'm going to help teach people about Bitcoin. I'm going to help make wallets, transactions, that whole, user interface a lot easier so we can get more people in here. And what did you do when it's time to teach people about Bitcoin? You start off with the history of money. Hey, look at all these forms of money that made sense that no longer make sense. Okay, we got it, Wayne. What's next? Well, the money you're using might be like these other forms of money, because once you get to a point where there's more of it, kind of loses its value. So if these older forms of money can come in and out of usefulness, maybe your dollar bill can do the same thing. So let's talk about Bitcoin. Let's talk about its scarcity. Let's talk about how it is the hardest money, how it's an asset. And you guys need to just go ahead and use that DCABTC.com calculator. Figure out how much you really want in the future. Go ahead and start putting that in each week. And then whether you go to Trust Wallet or Edge Wallet or a number of these other places, Wayne and FIO can get you to a point where you can just have a nice, neat handle that makes it easier to send and receive. So you're not like me and you're like stressing out about each letter and number in your big old address to make sure your Bitcoin goes where you want it to go. Because if you send it to the wrong place, it's gone. So where do you want our Saturnaires to go if they want to learn more about Bitcoin from you, or if they are a wallet that's like, hey, man, I want to get some of this FIO action?
Yeah, so actually you can find me on any social media network as Blockchain Wayne. Look for the verified accounts. I've had a lot of, fake copies over the years, so find me there. Our website, you can contact us there. It's fio.net. Very simple. Easy to type in and find. And also for the past 5 years, I've also been working with a consortia, like a group of 5 of us, where we just build educational products and tools. We've got a free school community called LearnVault. So if you're familiar with School, SKOOL, school.com is an education platform. It's really for anything. Anybody wants to build a course. We've got some free material in there, including we also have a course called Get Off Zero, which focuses on getting people their first Bitcoin, right? The basics of the why, the how, and show them how to accumulate. And
let's make Wayne an offer for his time on the show. But before we do, we're going to take a little bit of a brain break. We're going to try some Ithaca hummus here. Now, what flavor did we choose for Wayne today? Because I'm going to serve as your taste buds here in the studio, Wayne.
Today, we've got the lemon garlic, the original classic Ithaca hummus, if you will. We do have a classic, but this was our first flavor. Fun fact.
And where can, if Wayne's in New Orleans, where can Nouvelle Orleans, as they used to say, where can he go to rip on some of this Ithaca?
Well, you could buy it at Kroger. You could go to Whole Foods. You could go to Sprouts.
Hit the Whole Foods. Yep.
Yeah, so do this for me, Wayne. Hit Whole Foods, get some lemon garlic Ithaca hummus, crush it with some woven wheat crackers, and then come back to the comments of our video and let everybody know what you thought about it, okay? All right, I'm going to rip on it real quick. Here we go.
Great batch.
It's so good.
What do you say that one is? Lemon garlic?
Mm-hmm.
All right.
Yeah, lemon garlic. So good. So good.
Wow.
Okay.
I could eat a lot
Yeah.
of that.
You get the whole tub.
Whole tub. I could probably dub tub.
Double tub.
I could dub tub that, dude. That is freaking delicious. Lemon flavor, garlic flavor, and then just like hummus flavor.
Goodness.
Man, okay. All right, so let's make Wayne his offer here today on the show.
All right, Wayne. So we really appreciate your time today. We believe in value for value here on the Sat Chats podcast. And so we want to offer you a small token of our appreciation for being with us today. So you're going to have your choice of $50, 50 USD, or $50 worth of sats, which if I go to the Clark Moody Bitcoin dashboard right now, we can see that the exchange rate of Bitcoin is $81,820 for one Bitcoin, which translates into 1,222 sats per dollar. So I'm going to multiply that by 50, and we get 61,100 sats, or $50. What's it going to be, Wayne?
Always go for the sats, man.
Yeah.
I love that.
Always go for the sats. Let's go. Yeah.
The only time I would say it'd be okay to take the dollars is if you plan on, you think you're going to buy a dip or something, right?
Good point.
If you're going to hold it as dry powder for the next dip, huh?
Yeah, but you never know, right? I mean, that's the thing about Bitcoin. It's adoption is going up. It's becoming unpredictable. It may go lower. So the safe play is always take the sats.
Yeah. So this evil spawn from the creature from Jekyll Island will remain safely encaged in this frame for today. We're not going to let that thing out, dude. It's got teeth. It's nasty. We don't like it. So thanks so much for coming on the show, Wayne. For all our Satillionaires, it's at Blockchain Wayne. They can also go to fio.net, fio.net. So if you have made it this far in the show, give us your value for our value, just like we gave Wayne value for his value. Smash that like and subscribe. Make sure you are among the first 1,000 subscribers on YouTube.
Do not be 1,001.
Do not be 1,001. Make sure you get your chance at 1 million sats. And then join us Fridays at 10 a.m. Eastern for a live show. I mean, two great things that happen once we get there. Also, remember, Sat Chat is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own, but Wayne's are pretty good, so you should think long and hard about them. Thanks so much for being here. We'll see you on the next one.